think I can improve the frame a bit.
Hello and welcome. As the spotlight is on Union Budget 2026-27, we speak to Anshuman Magazine, Chairman and CEO for India, Southeast Asia, Middle East and Africa, CBRE, a global leader in commercial real estate services and investments. That really is what CBRE does. Sanchita Mukherji also joins us, Senior Business Economist and Managing Partner, Talk the Walk. Thank you both for your time. First, really, this budget, what really is the real estate sector seeking? How can Budget 2026 then continue to drive India's growth story, Sanchita? And what really are the structural issues that must be addressed?
Thank you so much for having me, Sakshi. It's always a pleasure to be in your show. I think in this year's Union Budget 2026, we need to move on from what we want to how do we build resilience in the domestic economy. See, it's very important to understand that external tariffs, trade wars, geopolitics, these are some of the things which are not in our control, but what is in our control is the internal response, right? So how do we build resilience? How do we manage to make this tremendous public capex, which the government of India has spent on infrastructure development last couple of years? How do we ensure that this becomes a magnet for driving private investment now into the domestic economy? So a couple of things over here we could actually look at from assembly to deep manufacturing, which is a domestic value addition. So instead of focusing on PLIs for assembly, we could look at PLIs, which is the production linked incentive on manufacturing components and import substitution, not by raising our walls, but making our floor very strong in the economy, which is import substitution, that is domestic capabilities of component manufacturing. That's point number one. Point number two is how do we spur demand? Now, spurring demand without causing inflationary pressures to come into the economy would be by increasing standard deduction, by increasing housing interest caps. This would give actually a lot of disposable income in the hands of the middle class to spur demand. Thirdly, the banking sector. The banking sector in today's date is one of the healthiest in a decade. So we need to move from caution to becoming a catalyst in the banking sector. For example, lending goes easily to very large corporates. However, MSMEs, which are the backbone of our country when it comes to real estate, infrastructure, manufacturing, MSMEs can be given credit guarantee schemes. And in NBFC lendings, for example, bringing down the SARFAESI Act thresholds can actually spur NBFCs to recover their loans faster and relend. So we need to be thinking a bit out of the box in this kind of a budget because we are looking at strengthening the domestic economy. And last but not the least, the idea I would leave you with, the expectation is, yes, last couple of years, there's been a tremendous push in public capex, which is, the public spending on building our ports, our highways, our freight corridors, rationalization of GST so that working capital does not get stuck in corporates. All of this has been done. Now, I think it's a move to pass the baton on to the private sector. This should act as a magnet for private sector to now come crowding in with investments. So I think very out of the box viable options like public private participation can be looked at. Real estate, which is again the backbone of the industry, and industry to it, priority sector lending, which will lower the borrowing costs in the real estate sector. These are some of the things one can look at. And of course, last but not the least, the government also needs to look at divestment 2.0, because without straining the fiscal deficit, it can be a very viable alternative to bring in more funds in the public for added infrastructure push.
Right. So a host of really suggestions and, a lot really that you're waiting for as far as infrastructure is concerned, Sanchita, and the real estate sector, like you mentioned. So expectations and a whole host of suggestions from you. Anshuman Magazine, do you agree? And really, what are the needs of the real estate sector that must be addressed this budget, to your mind, that can continue to drive India's growth story?
So the key is the budget can only allocate funds, give fiscal incentives, and stimulate the economy. The number one, and this is not which will have an impact on real estate, is how to boost consumption, right? Now, if I look at real estate in housing, if you to improve housing demand, then you have to give incentives, tax incentives. Of course, that's not in control. If the interest rates are competitive, that again, boosts demand. So really, overall, how do we boost consumption, including giving incentives? For example, REIT structures have come up for commercial real estate. So if that becomes more tax efficient, there'll be more REITs which will come in, which will put in more money into commercial real estate, for example. So I would not go into specifics. There are many other specifics, but how to boost consumption. The other thing is what the budget has done since the last few years positively is allocate a large amount of money into infrastructure. Now, infrastructure investment, the large amount of money going to infrastructure, and hopefully implementation, of course, is a separate discussion. But that means not only it'll impact real estate positively, but as a country, the whole investments, and it gives a boost to our economy. The third, I would say, consumption infrastructure is important, and then of course the services sector. How can the budget give any incentives? Now, for example, in commercial real estate, a large part of the demand right now is coming from global capability centers, GCCs, and it will continue to do that. India is a global offshoring center, and if you look at our services side of the sector, the large part is technology, global capability centers. So whatever the budget can do there, again, I'm not going to specifics. And lastly, very quickly, is manufacturing. We have seen manufacturing is improving. For example, as a company, we have an industrial arm. We work with manufacturing and logistic companies. There is an improvement over the years, but we are still far behind, especially in the manufacturing side, and we cannot grow as a country if services and manufacturing both don't expand. So in this budget, PLI scheme is which came before. I think that's made a positive impact. Whatever else can be allocated to improve that will be great.
That's right. Well, those really are the whole host of, like you said, suggestions as well as expectations that you both have from Budget 2026. But for the real estate sector in particular, Anshuman Magazine, there have been quite a few reports how affordability push and policy clarity really is the need of the hour. Do you agree?
Yeah, the government has got this Pradhan Mantri Awas Yojana, which the budget has been allocating more money to it, which is quite good. On the ground, there had been huge targets. Now, sometimes the targets are not met, but because of those big targets, at least even if 60-70% of the target has been met, we have affordable housing or low-cost housing on the ground. However, I think, like it was mentioned earlier, that there has to be public-private partnership for if we really want to increase the supply of affordable housing. And of course, the government still has to give more incentives, especially, see, from the consumption side. You can give tax benefits. You can try to give some lower interest mortgage rate, but there has to be incentive for developers or people who want to do development for low cost and affordable housing. Right now, I feel there's not enough incentive because land is very expensive. Just the whole process of development is difficult. How to incentivize developers and investors to really develop and bring the supply for affordable supply would I think the budget can do better there.
That's right. Sanchita, do you agree? And lastly, to ask you and to wrap this up, as far as real estate is concerned in particular, do you agree with the fact that, look, we need to look at more private investment and involvement coming in, targeted funding really also coming in, and the fact that, look, boosting urban infrastructure and focus on policy measures really is the need of the hour?
Yes, absolutely. I'm very glad that Anshuman touched upon very vital points in this sector. What he just mentioned, in fact, I'll just add on to that. A very meaningful way of looking at private public partnership is to restore brownfield projects. First of all, if the government is able to monetize the existing roads, power plants, for example, they would, like I mentioned before, a divestment kind of an option. They would have a lot of funds without having to put pressure on the fiscal deficit. That's point number one. Point number two is to aid private sector participation in a sector as critical as real estate, to enable builders, developers, real estate participants, infrastructure participants to participate meaningfully. One collaboration could be that the private sector takes the operational risk and the government takes the land acquisition and the regulatory risk.
Right.
That would be a good participatory mode of collaboration. That's just my thoughts on the subject.
Right. And as far as the structural issues are concerned, Anshuman, as someone who's looking at the sector very, very closely, right? What really does the focus need to be this budget to ease those challenges and those structural concerns?
See, structural concern again, if you look at some of the things which are happening, see, land is a state subject, right? So land is a big factor. The cost is going up. Acquisition of land is a challenge. And acquisition of land is not a challenge only for real estate. Even if you have to put up a factory, you want to put a hospital, you want to put a school. So unfortunately, the budget can only do that much because it's a state subject. But then the budget can give more incentives. How, like I said, how do we get access on relatively, I would say, cost-effective land and give enough incentives for people to, or developers, investors, institutions to put money for development. And this is not only for housing, which is extremely important, but this will be for social infrastructure. We need more hospitals, we need more schools, we need everything, infrastructure, more metros. So therefore, from the real estate point of view, number one is the land acquisition and how to make it easier. And one good thing is what the budget has actually done, that by allocating huge amount of money into infrastructure, as infrastructure improves, more land kind of releases for development. Because if you have a highway, you have connectivity, more land comes for to be development. You could develop it, and that is a positive. So as long as the budget puts money into infrastructure, including transportation, be it airports or roads, it will have a big positive impact on the real estate sector. However, the key is implementation. Like I always say, after this, budget can allocate the money. The government needs to make sure that whatever that money has been allocated in the budget gets invested and the projects get implemented on time.
Right. The key is allocation. The key is implementation. Thank you for saying that, Sanchita. Do you agree? And lastly, as someone who is tracking the entire economy, very, very closely, India's infrastructure spend as a percentage of GDP. What really, if I had to ask you, what percentage should that be then? And where should we be looking at that for an overall infrastructure boost for the economy? What would you say?
Yes, absolutely. In fact, in the current state of geopolitics, I often say that one does not need to look at geopolitics only with a negative lens, right? Because in the current international order, which is so dynamic as an environment, India can easily reposition itself, which it's doing, as a very, very credible supply chain option, right? So, in that aspect, I think what Anshuman just mentioned is very vital. Instead of having headline grabbing allocations, it's the last mile implementation which is critical at this juncture to drive domestic growth, because we cannot be having an export oriented growth, or we cannot even be looking at it. And right now, with our macros as fine as they are, and we are looking at a situation in which India's per capita income growth is slated to go up from $2,700 approximately to almost $4,500 by 2031, right? So if that is the kind of growth that we envisage, we need to look at innovation, we need to look at infrastructure, opening up all supply chain bottlenecks, having single window clearances, cutting through red tape, and we need to do that very fast. So instead of allocations, I think last mile implementation is the key in this year's budget.
Last mile implementation is really what you both agree on. That implementation really is the need of the hour. Thank you so much for sharing your thoughts and for this interaction. Thank you.
Thank you.
Thank you.
Thank you.